we had a pretty big week in the stock market. I mean, this week we had retailer earnings, so Target, Walmart, TJ Maxx, Nordstrom, all these names right here have reported. We had a pretty volatile week. Also, we're not even sure at this point if we're gonna get a deal, no deal. And Netflix stock price has been pretty volatile also. But it seems that there's a lot of bulls. For those who don't know what a bull is when you're certain about a stock. There's been a lot of bulls in Netflix for a long time. I mean, that stock price has not declined. I mean, it did take a decline from in July, but it has recovered very. It has been recovering steadily. Target, we had Target beating. Not we have Target beating by just delivering a monster quarter, and which has caused me to reevaluate. So I mean, if you're looking at this and you're seeing that now it's 9,900 instead of the 5,000 that I were asked, because earlier I had a problem in the week with Robinhood where they just really disappointed me for the last time. I'm going to link the video in one of these corners that should pop up if you guys want to go ahead and take a look at that. So I had to basically, I had to combine my two portfolios, and I decided just to put on M1 Finance. So over the week, overall time, we're up still 1%. Like again, we started this portfolio in the 22nd. It's a dividend growth portfolio, or mostly what I'm trying to achieve is a passive income. I mean, over the week, we're down again. Volatility click in. Day we're up on Friday due to of course some comments from Trump. Besides that, over the month we're still up a pretty significant amount, and we're still doing all right. We market gains, although we're not paying attention to that really. We're still it's still good to have market gains. It's better to buy a stock and have it go up than go down and then you lose your value on it. But we're still up 85 and our dividends so far we earned $16 in dividends, and we started this in well, I wouldn't say the end of October. So I mean we're doing pretty good. And what I really want to talk about first is Target, and they had a monstrous just smashing quarter. You can see right here that we're up 20% on the stock just from they're just Targets just did amazing this earnings season. And I mean they grew a 4.5 comp sales grew in Q3. They raised their guidance, of course, due to the holiday seasons coming up. I mean, holiday seasons, Americans do tend to spend more when it's a holiday, and of course, in Christmas, Thanksgiving, uh, and basically, bottom line, they had improved 110 BPS to 29% of sales. The digital sales rose 31%. And ahead, they even anticipated that they're going to make more money. They're going to make more than expected. They were seeing 590 to 620 per share. Instead, they're getting, earnings per share. Now they're seeing 625 to 645. So I mean, I'm guessing what that means is the next earnings season. Although again, this is just a guess, not a prediction. Because you can never know what would happen. But the consumer does seem strong. And I mean, Target has grew just jumped, I think, 20% or 15% that day on beating revenues. Now we had Nordstrom report, kill did great in that quarter. TJ Maxx I think did just fine. Walmart, of course, Walmart always beats, but it was only up 3%. And I think even when Walmart beat, I think Target actually rose on that. We had disappointing results from Macy's, Kohl's, and J.C. Penney. Macy's is yielding 10% right now. So I was looking earlier. I was looking into it earlier, seeing if the price of it and its if the risk reward was worth it. I'm still unsure. Kohl's just did horrible. JC Penney, I'm actually not sure about JC Penney. And I mean, let me see. And I think overall, however, they did not do as well as they were expected. And so what I did in my portfolio was I went I went into it and I took out a few names that I just didn't like. I mean, I'm not saying that these names are gonna do bad, but I wanted to focus on yield, so I took out Coca-Cola, Costco, Pepsi, and PG. Which overall I think these are all good holdings. So if you have it in any of your portfolios, I'm not saying that they're gonna go down or that they're not worth it. I just didn't think they were as compelling as these ones over here, and I wanted to cut out a few and just focus on the ones that I really think that are gonna top off, just do amazing in the next few within the next in the next 5 years or so. I increased my target or actual target allocation. Not, no pun intended there, not the actual target. I increased it to 13% due to that quarter that we just saw, which they did amazing, and that they lifted their guidance for the full year. Now, I mean, with great earnings comes more more reliable and you know confident dividend raises. So hopefully, I think Target will soon be raising their dividend. I'm not sure when, but that just brought in some confidence to me. Has Target has also been increased just because I believe that their new Disney Plus streaming services will bring them a lot of cash, and I think that one, although the stock did hit 150, I don't think that this is where it's gonna stop. I think that the shares are only up 32% year to date compared to some other runners there that they're up 62. I mean, Roku, although of course different company, different business, different growth. Roku, I mean, things like Roku and Target are up 60. I think Target's up 63%. Roku's up I think still 400%. Now, I'm not comparing Disney, a hundred and a 267 billion market cap company to Roku. I just think that the Disney's still very undervalued, and that this Disney Plus is just gonna add more value to their company and more earning, more it's gonna become a more profitable company. I think that they're doing an amazing job, and they're executing it tremendously. Nike, they raised their dividend by 11% this quarter, these past few days, I think, maybe a week ago or so. And I actually really like Nike. They've been growing earnings every year, uh, consistent dividend payouts. Great, no decline in sales. This week, I think last week they decided to dump Amazon. Well, here's the article. They decided to dump Amazon just because they didn't see their sales, and because they didn't. I guess they didn't. They weren't seeing a lot of sales on Amazon, or seems that they didn't need their help. So the Nike just decided to cut them off, and I don't think it's a bad decision. It seems. I mean, Nike is one of. I think I could say it is the biggest brand in the U.S., and I think that they made the right decision. I mean, here he said let me see, the Nike spokeswoman says that as part of Nike's focus elevating consumer experience through more direct personal relationships, we have made the decision to complete our current pilot with Amazon Retail. We will continue to invest in strong, distinctive partnerships for Nike with other retailers' platforms, seamlessly serve our consumers globally. So I don't think this was a bad decision for Nike. I think that their brand is strong enough that they don't really need any secondary or I think you would call it third party what do we call it? Advertise? Y- just consume you. I don't know. I'm not sure what you would call Amazon in it. There would be just a third party. Nike already has a strong brand. I doubt that this is gonna hurt them any bit for a quick second. And I think this was the correct choice. So I went into my portfolio and I increased the target allocation in there too. Home Depot just currently took a recent dip to 225 from 240. I don't think it's overvalued. I think it's fairly priced at 225, and mostly it was not because some changes that they made earlier this year did not, at least did not get there as the CEO was expecting it to. So, and I think they're gonna do just fine. So literally what I came in here is I upgraded targets from companies that I think are gonna grow and gonna keep that dividend high and are gonna continue to be reliable. So so we have Disney, Nike, Target, Home Depot, British American Tobacco, Tapestry, Estee Lauder, and Comcast. These are all companies that I think are gonna do more better than I expected due to the consumer being so strong. So I also increased my target allocation in the sector. I increased it from as you can see, I did decrease real estate and bonds. Lately, since there's no more volatility, what I notice is that usually when there's no uncertainty, I'm sorry, well no, when there is uncertainty, a lot of investors like to go into the real estate sector to keep to I guess you would call it protection. So I mean I'm not gonna sell anything here or switch the target allocation. I mean bonds and real estate are $2,000 each worth in my portfolio. Not switching anything there, but did decrease the targets just to add it to consumer utilities. I mean, a lot of stocks here are also value. So Duke Energy, I did increase the target in Duke Energy and also Dominion. As you can see, I also added Energy Transfer. It's an MLP, Master Limited Partnership. Those they're required to pay out most of their earnings. I think B Brookfield Renewable Energy is also an MLP. I'm not sure. I'm not too sure about that one. I did do my research on them a long time ago. Uh, but yeah, just a few changes made to the portfolio. And I mean, if you had any questions about what's going on lately in the market, and it's been a crazy couple of months, you could say a crazy year. I mean, just in back in November, we hit 2800 for the first time. I did a video on that also if you want to take a look at that. Uh, in November 20th, we had the Dow drop 100 points on reports saying that Phase One deal might not be complete. Then it was we had a 3-day losing streak on that. Then retailer earnings came out. Some were good, some were not too bad. What I like to say is that the good retailers did amazing. The bad retailers did not succeed, although the consumer is still very strong. Now, if you're one of those headline investors and you're trying to base your investing in these headlines, the best if I could give you some advice here, you probably don't want to be doing that. I mean, this has gone back and forth and back and forth, and yes, we'll have a deal. I mean, the market rallied 109 points on Friday due to Trump saying that we're very close, and those are the exact words that we said 2 weeks ago. So I mean, I'm sure nothing has changed. I mean, China wants the U.S. to roll some tariffs back. Trump doesn't want to because, of course, the relationship has been unfair already. So it's these type of headlines going back and forth are not going to get you anywhere. And just stay to your method of investing and keep it on going.